Hi there. In this video, I would like to walk you through the GEX Live Chart View inside the TanukiTrade web application. In the previous video, we looked at the table view where we explored the option positioning data in a structured format. The charting view, our newest development, displays exactly the same option metrics, but in a visual chart format, so that you can observe how the underlying price interacts with the positioning structure and different option metrics. In other words, the table view helps you understand the structure of positioning, while the chart view helps you see how price moves inside that structure. At the center of the screen, you see the price chart of the underlying asset. Before explaining all the features in here, it's important to understand how the price data on this chart works, because this is something every user should be aware of. The underlying spot price data begins updating at 6:30 Eastern Time, and it continues updating throughout the trading session until the market closes at 4 p.m. Eastern Time. That's the regular market closing time. So this means that between 6:30 a.m. and 4 p.m. Eastern Time, the price here of the underlying asset will constantly and continuously update as the market moves. However, it's important to note that the option positioning metrics themselves start updating slightly later. The option data, including the metrics such as the GEX, DAX, and other option chain statistics, begin updating only at 6:40 a.m. Eastern Time and continue updating until the market closes, which is 4 p.m. Eastern Time. So in practice, this price chart updates from 6:30 a.m., while the option positioning metrics start updating from 6:40 a.m. Eastern Time, and both continue throughout the regular session until the market closes. Now let's talk about the nature of the price data itself. The spot price displayed on this chart is derived real-time data. This means that it is calculated and aggregated from market feeds and reflects the current market movement very closely, but it may be slightly different from the official consolidated price coming directly from exchanges such as Nasdaq or New York Stock Exchange. It's important to understand that this chart is designed for analysis and positioning interpretation, not for executing trades directly. Before you place any live trade, you should always verify the price on your own trading platform or brokerage system or account, which displays the official executable market data at the current moment. In other words, the data shown in here is real-time derived market data, but for execution purposes, traders should always confirm prices on their actual trading platform before entering a live order. You should also be aware that before 6:30 a.m. or after 4 p.m. Eastern Time, the price chart will display the last available closing price, and the underlying price will not update during these periods. You also have to know that outside of the main session, the option positioning metrics are not updating, which means that GEX, DAX, open interest, and other option statistics may become outdated or incomplete relative to the current price movement. Because of this, analyzing option positioning outside of the main session can sometimes be pretty misleading. For that reason, the TanukiTrade platform is primarily designed to be used during the active market window between 6:30 a.m. and 4 p.m. Eastern Time, when both the underlying price and the option positioning data are also updating consistently. With that understanding in place, let's continue with the chart itself. Just like in the table view, you can start by selecting a ticker. You can either type in, for example, Apple, and it will come up the search button, or you click here and you start, for example, Coinbase. Here you can set the ticker that you want to look at. And once the ticker is selected, the chart and all related metrics will update automatically. Next step is choosing the right expiration you want to analyze. The available expirations always appear above the chart in this area. These correspond to the same expirations we saw in the table view. If this key-only toggle is enabled, the system will display the most relevant expirations, such as the current 0DT and some other weekly and monthly expirations, and also the all expiry, which contains all the option data for the furthest expiration. If you disable this key only toggle, you will see all the available expirations from the current option chain. To keep it simple, I would recommend using the key only toggle to see only the most relevant expiration, but it really depends on your trading style and on the underlying you want to analyze. It's also important to mention the aggregation mode of the GEX and other metrics, because this affects how the metrics are calculated. Just like in the table view, the system supports the cumulative GEX, which is this one, and the other one that is the standalone GEX calculations. By default, the cumulative GEX is selected. When it's selected, the system aggregates all earlier expirations up to the selected date. So for example, if you select the 20th of March, the GEX calculation will include all the previous expirations GEX data up to this expiration. When the standalone is selected, the metrics only represent the specific expiration you are currently viewing. So for example, let's compare it. Let's change the time frame to daily for SPX, and let's compare the difference between the standalone March 20th and the cumulative. Right now, what you can see, these are the most important levels that we will talk about later. And if I switch back to cumulative, the levels changed. The 67 put support stayed the same, but the core resistance changed because of the cumulative nature of the GEX calculation. Now let's change it back to 0DT and 15-minute period. And the distinction becomes particularly important when you analyze expirations beyond the 0DT, because if you are looking at the 0DT, it doesn't matter if it's cumulative or standalone, because there is nothing before 0DT to aggregate on or to sum up. So that's why it doesn't matter if you are a day trader and using 0DT, if you select cumulative or standalone. But for later expirations, like a couple of weeks or months, the aggregation can make a big difference. So for example, if you are a swing trader, I would recommend using the cumulative GEX profile for the selected expiration, because that will show you a much better picture of the whole positioning landscape until that expiration. Now let's go back to the time frame selection here, because it's important to understand that these time frames only affect the price. The option positioning metrics themselves are not calculated based on these chart intervals. They remain tied to the selected expiration and the option chain data. So these metrics selected in here are not tied to the time frame selection, but they are all based on the options data. Now let's briefly talk about the metrics that we have already covered in our table view tutorial previously. Around the price chart, you will see the option metrics displayed in 3 columns. There is one metric column on the left side of the chart, and there are 2 metric columns on the right side of the chart in here. These columns are fully customizable and allow you to select the metrics you want to analyze. The metrics available here are exactly the same ones that we discussed in the table view tutorial video. Because the left side of the chart is visually further away from the current market price, from this price displayed in here, many users prefer to place slower changing positioning metrics on that side. For example, a common example is a net open interest, which represents existing positioning rather than intraday activity. And net open interest does not change during the trading day. On the right side of the chart, I would recommend placing more active metrics in here, such as volume related indicators or gamma exposure metrics, since they provide more immediate context for current market activity. The most important metric in the system remains the net GEX, which I placed in here in this metric column, which represents the net gamma exposure of the underlying asset for the selected expiration. It's very important to understand that these GEX metrics are always derived from the selected expiration and the selected aggregation mode. So these changes based on the expiration and based on the aggregation calculation mode. Going back to the meaning of net GEX, the gamma exposure reflects how the option market makers may need to hedge their position as the price of the underlying moves. Areas with large gamma exposure can sometimes act as reaction zones where volatility may compress or expand depending on the market regime. So if we are looking at the current example here for SPX, these are the highest net GEX levels. You can see them on these bars. These are the highest ones actually right now. If we are looking at the 0DT expiration for today. Another important metric is net DEX, which represents the net delta exposure. The net DEX helps illustrate the current directional bias embedded in positioning, although it never should be interpreted as a direct market prediction. You will also find several open interest metrics, including the net open interest, the detailed open interest, and also the absolute open interest. The difference between those three are the following. If you are looking at the net open interest, it will show you the call open interest minus the put open interest. So if you see a green bar, it means that the call open interest is much higher than the put open interest in case of the 69.50, for example, in the SPX right now. That's the net open interest. And if you look at this one, for example, on the downside in here, you will see that the 6700, the put open interest is much higher than the call open interest. That's why we call it the net open interest, to see only which one is higher than the other one. So that's why you can see green bars and red bars. If you want to see a more granular picture of open interest, you can select the detailed open interest, which will always show you a green bar and a red bar depicting the amount of call open interest versus put open interest. You see here that it's almost call open interest. There is absolutely or nothing close to being zero as put open interest. These are much higher puts, but still call open interest is higher. So this is a detailed view of open interest, and you can also see the absolute open interest, which will never be colored because it's the absolute aggregated value of put and call open interest. So here you can see that the highest open interest of the complete chain for today shows that 69.50 is the highest open interest for this current day. But for example, if I go back to March 20th, we will see a very different picture, because if you want to check out the absolute open interest, what we can see here is that the 6900 absolute open interest is the highest one, and the secondary one is probably this one or this one. So the absolute open interest shows you the aggregated cumulative open interest on each and every strike based on calls and puts aggregated together. And there's also a very nice thing about this charting application is that if you move the mouse, there will be a horizontal highlight in here. You will see this horizontal highlight, and that will also highlight the strike price. Also, we'll show you in a little toolbar or tooltip in here that how far the current selected strike price is from the current market price. And for example, if you switch it like for TIT, which has very wide strike differences for a daily chart, you will see that these horizontal highlighters, these bars, are more wider because the strike widths are wider for TIT. Let's go back to, for example, Apple and see how it shows. Right now you see these lines are also wider. I am showing these highlighted horizontal bars in here, and they are representing the strike differences. If you move around with your cursor in the case of Apple, for example, you will see that here you will find 2.5 difference strike width. But if you move down in here, you see how these vertical lines change because the width of the vertical lines is higher, because here you only find 5 strike differences that are showing in here. So these are based on strikes, and the horizontal highlighter of the cursor will show you the strike differences of the current underlying product. Going back to SPX and 0DT, you also need to understand about open interest that it represents existing positioning in the option chain. Unlike the volume data, open interest does not update continuously during the trading day. It's typically updated once per day when the clearing data becomes available before the market opens. The volume metrics, on the other hand, represent current trading activity. These metrics show where option contracts are actively trading during the day. Here you can see the net volume of the underlying. Regarding the volume data, we have two volumes, the net volume, which aggregates the call and put volume. So if you see a green bar, it means that the call volume dominates. If you see a red bar, it means that the put volume dominates on that specific strike. And you also can see the detailed volume, which shows you the call volume and the put volume together in the same bar. And you will see based on the colors, that if it's a green one, it's call volume, if it's red, it's put volume. And it's also important to understand the difference between these two metrics. The open interest represents positioning, while the volume represents the current flow. So that's why it's very useful to have this charting view, because if you are, for example, a day trader and you want to see the detailed volume and you also want to see the chart in a, for example, 5-minute period, you can have it, you can do it, and you can see how the volume changes on different strikes and how the underlying changes with the volume or any other metrics that you want to follow. Regarding the absolute values, you may also want to see the absolute GEX value, which focuses purely on the magnitude of gamma exposure regardless of direction. This can help identify the areas where the dealer hedging activity may be the strongest. So you can also see the absolute GEX value based on the expiration and the strikes. You will also notice that here the platform allows you to change the candle color theme. This is the classic, the default one, but you can change it to monochrome, to halo. If you prefer line, you can change it to line. Currently, this is the standard one that I'm also using. On the chart itself, you will see several horizontal structural levels that you are already probably accustomed to if you are using our TradingView indicator set. Currently, the chart highlights only the core resistance, the HVI, the high volatility level, and the put support. These GEX levels, it's very important, they are not directional indicators. They are not buy signals and they are not sell signals. The names, the labels you see on the chart, such as the core resistance or put support, are simply labels for where positioning is concentrated. So when you see, for example, a level marked on the chart, you should not assume an automatic outcome. An example of a resistance label does not mean an automatic price rejection, and the support here down does not mean that there will be an automatic bounce in the marketplace. What these levels really represent is a positioning map, the areas where the dealer hedging dynamics and positioning concentration may increase the probability of a reaction. But you know, the direction of the current reaction always depends on the context, the momentum, and your own trading framework. So never assume automatically that if you see a market approaching core resistance, it means that the market will reject the price. And hence, if you see the market is currently going down to the put support, never assume automatically that the market will bounce. You have to watch for the momentum, and you need to use your own trading and analytical purposes to decide on market trading direction. Simply put, the core resistance marks the level where the largest core gamma exposure exists, while the put support marks the level where the largest put gamma exposure exists. You can also verify this by looking at the net GEX column, because if you look at this, is the highest call net GEX bar in here, and this one is the highest put net GEX bar in here, which are constantly changing during the day. So if you are specifically trading 0DT, you will see that these levels can move as the market moves during the day, especially in a very high volatile market like we are trading right now. But if you were to see the gamma levels for like Amazon for 60-day or for every expiry, they don't tend to move around that much during the trading days, because those are metrics for later expirations. So for 0DT, the core resistance, the put support, and the GEX levels tend to change very fast, especially during volatile market periods like nowadays. So once again, the purpose of the core resistance, the high volatility level, and the put support is to highlight zones where you should pay attention, not the zones where you should automatically enter a trade. Think of these as reaction zones, not predictions. GEX is a way to map volatility regimes and hedging pressure. It helps you understand where the market may behave differently. If you use any of these metrics, any of these levels, always combine them with your own analysis, your own risk management, and your own trading strategy. So going back to these levels, between the core resistance and put support, you will see the high volatility level, or HVL as we abbreviate it. The HVL is the level where the market transitions between positive gamma and negative gamma regimes. When the market moves above or below this level, volatility dynamics can change significantly, which is why we refer to it as high volatility level. Right now, only these key levels are highlighted on the chart, but the gamma bars here themselves still reveal the full positioning structure. So if you look at the distribution of GEX bars across the strikes in here, you can visually identify other areas where significant positioning exists. So for example, you can see that currently the put support is 6800, because this one is currently the highest net GEX bar on the put side, but you can also see visually that this one is the second biggest one. Also on the upside, the current core resistance is this one, because this one is the highest net GEX bar, but you can also discover that the second highest net GEX bar is the 6950. So visually on the distribution of the net GEX bars, you can also see what's going on in terms of the GEX distribution or GEX values. So in other words, even though the chart only highlights the most important structural levels, the rest of the gamma landscape is still visible through the bar distribution on the right. Now let's talk about the side panel on the right, which provides additional information. For example, you can see the selected expiration, the GEX and DEX values and how they changed in the last one trading day. You can also see the gamma profile. Is it positive, transitioning, negative gamma profile, or which one? Here you can see the current market price and the core transition, core resistance, HVR, put transition, and put support levels right in here. Below that, you will see the chain activity section. This section visualizes the relative activity between call options and put options in the option chain. It compares the volume and the open interest levels to determine whether activity is more concentrated on the call side or the put side. However, it's very important to remember that activity does not equal direction. Higher call activity does not necessarily mean that the market will go up. It may simply indicate that traders are selling calls, calling positions, rolling or hedging exposure. Likewise, the higher put activity does not automatically imply a bearish marketplace. These metrics are simply statistics derived from the option chain. They are tools that help you understand the context of the market positioning, but again, as the GEX levels, they are not directional or they are not signal tools. So if you see a high level of call activity, it does not necessarily mean that the market will go up. You have to watch for momentum. You can confirm with your own trading strategy. You can confirm with the volume, with the GEX levels, with other metrics that you are looking at. But only looking at the chain activity and saying, I'm buying this underlying because there is a higher call activity, doesn't make sense. So these are not signal, these are not directional indicators in and of itself. These are statistics derived from the option chain itself. So all in all, the purpose of the charting view is to combine the price movement with the option positioning data so that you can observe how the market behaves around important structural levels and zones. So we hope that these tools will simply help you by providing additional context about the structure of the options market. I guess in combination with the table view, this charting view provides a powerful way to analyze the option positioning and understand how the underlying price may interact with that positioning landscape. So I think I have just covered every important aspect of the charting view in this video. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.